So we were a venture fund, $85 million venture fund, started 2 years ago. We've actually written some agreements with blockchain entrepreneurs that have the option to convert into tokens or equity, which is a very interesting thing I hope we'll discuss of like where does the appreciation happen in any of these companies, as it is a little bit split between the equity and the tokens. And so at this particular moment, we are in the process of an ICO for one of the companies that have gone through one of those agreements, and there's US dollar value attached to that option at this moment. And so we're actually having that discussion with our investors in our traditional venture fund to decide if we want to go forward with that or not.
We got into this about 17 months ago when I met Jeremy Kaufman, the guy from Library who sat here, because honestly we thought he was a really compelling entrepreneur, and I hope you guys thought that as well. Just a commonsensical guy who wanted to build a real business. And honestly, the token was like the last part of the investment. We weren't even thinking about it. Back then, the token was worth like a fraction of a cent, and we were sort of trying to convince him maybe the token thing, like let's put it to later. Let's focus on free content or US dollar content. And he stuck to his guns and said, no, you don't get it. This thing is critical to what we're doing. And like, okay, I don't know, like we've been doing this a long time. That seems like it's complicated. And then the token went from, sub a penny to like a penny to a nickel to 20 cents. And then a few weeks later hit $1, and the company's sitting on 400 million of them. And like, holy smokes, the light bulb finally went on. Like, this is a new way of building a business, and you can do a lot with those tokens, acquire customers and acquire content and make payroll and stuff like that. So at that point, we were talking to our LPs about, okay, what do we do here? Should we do more of these? Should we try to should we create a structure where we can have equity upside, but if the token runs, then we can get liquidity through it? Honestly, we're trying to work with all the lawyers right now as to the best way to have that optionality, including the guys from Cooley, who I think are the leaders in this space. There's no clear answer yet.
We have no idea how this all will play out, and we're having all these discussions in real time as well. So he said something that's really profound. Where's the value being created? Is it in the equity or in the token network? And if our only instrument is an equity instrument, then we could be building companies that create a huge amount of value in the token network and not take advantage of that. The entrepreneurs have the same issue, right? If you're an entrepreneur, unless you find a way to participate in the token sale dramatically, perhaps holding back 50%, 70% of the tokens, then you also don't have a way of participating in the value creation. And then what's the governance between the two? Who governs the token value? Who governs the equity value? So it's a really complicated set of issues that we're all kind of fumbling our way through in real time. Yeah, it's massively disruptive. If you think about all the structures and systems and processes that have been built around equity, whether it's stock option plans and grants, whether it's legal frameworks, whether it's governance, control, voting shares, all of these things that have been structured around the whole notion of equity financing, that is now potentially highly disrupted by token financing. So how do you incentivize employees? Do you give them tokens? Well, what if your tokens crash? Because tokens are far more at risk of being far more volatile. Or what if your tokens go 100x or 1000x, like what's happened in some of these companies, and suddenly you have all these paper millionaires 6 months in, 12 months in after an ICO who can just walk out the door. How do you handle vesting schedules? How do you handle clawbacks? How do you handle acceleration? How do you handle M&A? We have no idea what happens when these companies get acquired. What happens to the token network? What happens to the control of that token network and the value created? So these are all things that we're all trying to figure out. As I said, we're kind of stumbling along and realizing that there are just incredibly profound implications that these token sales and these distributed networks are creating.
Yeah, I wouldn't want to be a Series B, C, D, E investor trying to get into crypto deals, because I don't think there will be any. I think they'll sell tokens, they'll raise money, whether ICOs or just sort of whatever evolves from it to be small token sales that you can do. Why sell equity when you can sell tokens? We are hoping, and it's possible that we're delusional, that very early stage companies will want more than just money. They will want the help. Because I think you've heard a number of panelists say, like, in the end, you have to build a real business. It has to be successful in order for the token to have long-term value. And so our bet is that entrepreneurs will want that help at the beginning. to build their team, to get the strategy set, to execute the marketing plans, to do whatever token sale they want to, and then build a real business. And that they're going to want an early stage partner in order to do that. And the small percentage that a firm like ours would buy is well worth the trade-off of increasing the likelihood of success. So I think it is massively disruptive to the entire business, not just venture capitalists, investment bankers, lawyers, everybody. That's kind of what makes it fun. I don't know, if you talk to people that are spending time in this space, we're kind of like giddy because there hasn't been something this fun and interesting that's come along in a long time. Of course, we're seeing new technologies every day, but not our business itself. And that's what's made this so appealing.
My joke to Dave when at the break everybody walked out was I heard it was the VC investor panel. Nobody needs VCs in this part.
The crypto capitalists.
Yes.
It's kind of like that.
I think the way to solve that is actually a lockup period. And in fact, I actually think all regulation in this space will be done by code as hard law. And in fact, you have to subscribe to that to get any transaction to execute. As another signatory, the SEC or others will probably be as part of that. And in fact, it's nice because you can define it. But I think there are a lot of challenges.
I do believe GitHub commits, GitHub trend, GitHub factors tell you a lot about whether there's a community that's building a chain that will be sustainable. And I do believe traditional volatility metrics, Sharpe ratio, things like that tell you whether the trading factors tell you whether this token, this currency is likely to have value. Those two things together are probably highly effective. You should know the team and what the company does. But for someone who wants to get in and buy baskets of currency, that's probably about as good as you get today. Given you could go out and tomorrow sell it on an exchange or do whatever you want. That's probably going to get you pretty far.
Sharpe ratio, that was impressive. I didn't know this.
Right there? I just looked it up right before.
You don't know fiat.
Here's what I do know. Here's what I'll tell you. I know fiat now, you just told me. Here's what I know. We work with a data scientist who knows all the ratios and does all this stuff, and he told me like 3 times, and I'm like, you know what? It's good that you know it.
I mean, I think operationally, we are not set up to invest post-ICO because I think you really need to understand the technical underpinnings very significantly. And in fact, you need to understand what's the velocity of the community. Are they being incentivized to work on the right project, the right pieces of the code base? Is it meaningful technology? And you heard Pat Merrick and others talk earlier about that. But in the pre-ICO world, it's actually the exact same diligence and investment criteria, right? References on the founders. Is there really a meaningful market opportunity here? And that's uncertain, given a lot of it's around traction and how is it built. And is there a meaningful product value proposition, something that's unique to market? It's not a database. If I see another company that is trying to do a blockchain company, it's really just a database in a different form. I don't want to see that. And then really it's fundamentally 2 new elements from the way I've ever looked at a venture investment. One is, what is the ICO structure if you're going to go a little bit later in the spectrum? Totally different way of looking at it. And from a business model lens, you have to look at it in a totally different way. Does a token make sense for this business model? And I used to look at business models, it's just very different now.